Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Wednesday afternoon, we have Ryan McCormack, QQQ Equity ETF Strategist at Invesco, to discuss weekly trends in the Nasdaq-100 with many companies that make up the index set to report over the next couple of weeks. In fact, Ryan, Amazon, Apple, Facebook, Alphabet, Twitter are all reporting earnings within 30 minutes of each other after hours, Thursday, October 29th. I mean, that should really be a fun one for those strategists that incorporate the Qs in the Nasdaq-100 into their strategy.
Yeah, exactly. I think that's going to be a busy night for all of us trying to dissect, the various earnings transcripts and just the results overall. But, it keeps things interesting.
It definitely does. So let's take a look at your first chart here with weekly performance Wednesday to Wednesday.
Yeah, so, the Wednesday to Wednesday performance, a tough week for QQQ, down 3.43%. That underperformed the S&P, down 1.94%. And this week we included the S&P 500 Value Index, down 0.94%. So value was sort of the relative outperformer, which is a trend that we've started to see creep in here over the last 6 weeks, essentially, since the end of August. That being said, I think when you're looking on a yearly standpoint, Q still maintains a pretty dominant lead in terms of relative outperformance of 34.48%. That's against the S&P's 8.17% return, and the S&P 500 Value Index down over 9% on the year. So, again, 26 percentage points of outperformance of QQQ versus the S&P 500 for the year. But this past week was kind of marked by, the continued conversation around increasing COVID incidence rates. I mean, some of the worst rates that we've seen here since July. And beyond that, what seemed like a stalemate or at least a delay in terms of additional fiscal stimulus, that narrative has really changed here over the past 24 hours as the White House Chief of Staff Mark Meadows was out in the press talking about the goal for a stimulus deal is to be done within the next 48 hours. So some optimism around stimulus maybe being done a little earlier than expected given the past week.
I feel like we see those headlines continuously, throughout the summer and even until now. And it's remarkable to see just how susceptible the market itself is to all this. It reminds me, in 2018 when we were talking about the China trade deal and how susceptible the market was to those kinds of headlines. But Brian, if we break it down even further into individual sector performance, what was out and underperforming?
Yeah, so I mean, when you look at sort of this preference for value over the past week, only one sector within QQQ was positive, and that's utilities. Within the S&P 500, they had two sectors, utilities and industrial. So your traditional kind of growthy sectors that have been driving year-to-date performance and performance over the last 10 years suffered this week. So just sort of right across the board. But as you said, that we look to change that coming up here in the next week or so, with all those aforementioned companies reporting and Tesla sort of kicking off the Q's heavyweights reporting tonight after the close.
And to wrap up here, you isolated a chart in Alphabet this week. What's the significance there?
Yeah, so speaking of Q's heavyweights, right? It was announced that the U.S. Justice Department is suing Alphabet's Google for antitrust, and really this is kind of the biggest antitrust suit that we've seen since Microsoft over 20 years ago, and it seems as though by all initial analysis that the Justice Department is following a similar playbook here, with much of the concentration on Alphabet's Google payments that it makes to become the default search engine on mobile devices as well as browsers. Very similar parallels to the Microsoft Office suite back 20 plus years ago. So I think this is something that people have been calling for some time, right? Do these heavyweights start to become the target of the Justice Department and antitrust? Now you look at price action of Google Class A and Class C shares, and certainly investors have largely shrugged it off, with a lot of analysts talking about, this could actually save money for Google if, they stop these payments to become that default search engine on these browsers. But, certainly something to keep an eye on, something that folks have been talking about here for probably the last couple of years. And, it'll be interesting to see not only how the Justice Department proceeds, but how Google plans to defend against the suit.
All right, Ryan, thanks for joining us on Trade Talks.
Thanks very much.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.